Are you ready for a crazy ride all the way through the dark side of the cryptocurrency world? Brace yourself for a roller coaster of sentiments as we dig into the outrageous stories of crypto exchanges that went bankrupt. From the jaw-dropping collapse of Three Arrows Capital to the unexplained downfall of FTX, these exchanges had it all. Epic highs, shattering lows, and everything in between. In this video, we'll reveal the appalling secrets behind these bankruptcies and uncover the lessons we can learn from them. Get ready to be enthralled, bewildered, and maybe even a little bit worried as we explore the gloomy side of the crypto world. The crypto market has challenged volatile trials in its 14-year history, causing bankruptcies due to hacks, scams, and negligence. In 2023, Genesis and Three Arrows Capital filed for bankruptcy, while FTX and Alameda Research failed in November 2022. These events emphasize the risks combined with investing in crypto, where even experts can fall victim to unpredicted black swan events. Lights out for FTX. One of the top 5 crypto exchanges faced bankruptcy in November 2022 after channeling customer funds to its sister company, Alameda Research, for some perilous bets. Yikes! A news report about Alameda's obligations triggered a mass panic, with users hurrying to withdraw $6 billion in under 72 hours. But FTX couldn't meet the withdrawals, leading to its collapse. Now, FTX owes a massive $9 billion to over 1 million creditors. But worry not, a new management team is on the scene trying to recover what's left and compensate for customer withdrawals. Can they pull it off? Only time will tell. Crypto burner fund giant Three Arrows Capital has been knocked rock bottom. In July 2022, 3AC proclaimed bankruptcy in the wake of a catastrophic cash flow crisis prompted by the downfall of UST, one of the most widespread stablecoin projects. With around $500 million invested in the project, 3AC was left with nothing as it crashed to the ground. Adding fuel to the fire, 3AC's leveraged positions across DeFi protocols were also eliminated due to falling BTC and ETH prices. The firm had borrowed funds from big names in the crypto world like Blockchain.com, Voyager Digital, Genesis, and BlockFi, leaving them all concerned by 3AC's downfall. Reports reveal a huge $3.5 billion in total debt. It's game over for 3AC, and the crypto world will never forget this epic fail. BlockFi's loaning platform hits a brick wall with $1.3 billion in debt. In November 2022, the platform filed for Chapter 11 bankruptcy, and it's not alone in its difficulties. BlockFi had invested a lot in FTX, which also faced bankruptcy, deepening the loaning platform's misfortunes. BlockFi also revealed that it had lent over $1 billion of clients' funds to FTX and its sister trading firm, Alameda. With $275 million owed to FTX US and customer withdrawals on hold, BlockFi is struggling for an opportunity to recover and repay its creditors. Bitcoin mining giant Core Scientific hit rock bottom in December 2022, filing for Chapter 11 bankruptcy due to the dropping price of the cryptocurrency. But don't count them out just yet. With resources worth $1.4 billion and burdens totaling $1.3 billion to a select group of creditors, Core Scientific is putting up a fight. They've come into a pre-packed bankruptcy and are collaborating with lenders to swap their debt for equity. Plus, they're still mining Bitcoin and making up a gigantic 10% of the network's computing power. Will they come out in the lead? Only time will let know. Voyager Digital's crypto crusade disintegrates. The US-based exchange hit rock bottom in July 2022 after a $660 million failure to pay from Three Arrows Capital. With its withdrawal system stopped, Voyager tried to stay afloat using a revolving loan from Alameda Research. But it wasn't enough to prevail over the enormous debt. The platform reported having $137 million in cash and crypto, but its hopes of recovery wiped out with 3AC's bankruptcy. Now over 100,000 creditors are left falling, and Voyager owes a massive $1.3 billion. Hong Kong's Babel Finance took some awful risks that left them in the negative. Their losses of 8,000 BTC and 56,000 ETH due to unhedged trading positions were too much to stand, resulting in a massive $280 million deficit. Nevertheless, instead of filing for bankruptcy, Babel Finance opted to reorganize their debt by raising $500 million in bonds and credit. It seems like they're still in the game, but will they make a return or fold for good? And that's a wrap, folks. We've seen the largest crypto companies go from hero to zero in a moment, leaving behind investors and creditors in a state of shock. Who knew that the unpredictable world of cryptocurrencies could lead to such huge failures? Well, one thing's for sure, it's a lesson learned. So stay tuned for more updates on the volatile crypto market. And thanks for watching Pigeon Money.